Hey, how's it going everyone? Welcome to another RF Crypto video. Today's markets, they've hit 2 trillion again. We are back to $2 trillion, the magical number, and it is due to a 1.4% increase in the global crypto market cap since yesterday. Bitcoin is up by 0.45%, and again, we see this trend where Ethereum always outperforms the market, but at the same time, when the prices go down, Ethereum's prices go down more than the decrease in the total global crypto market cap. So if the global crypto market cap goes down by 2%, Ethereum's price will go down by 4 or 5%. The whole market is basically up. There are some anomalies that we see in the market which have seen a drop, such as Litecoin, such as Crypto.com coin, Shiba Inu, and Dogecoin, and these are due to internal factors that have nothing to do with the market. As we said before, the coins in general in the crypto market are becoming less and less correlated with the bigger coins such as Bitcoin, Ethereum, and other top 10 coins. So even though the whole market moves up and the biggest coins are moving up, other coins might go down due to factors which are uncorrelated to the market. And I guess that's what's happening now. On some very, very positive and surprising news, Berkshire Hathaway invests $1 billion in Brazilian digital bank NUBANK. At the same time, they reduced their MasterCard and Visa positions, according to SEC filing. So in December 2021, when NUBANK went public, Berkshire Hathaway reportedly acquired 30 million shares for a total of $250 million. In the fourth quarter of 2021, so between September and December, Berkshire Hathaway sold 1.27 million shares of Visa and 302,000 shares of MasterCard. And in June 2021, Berkshire Hathaway invested 500 million in NUBANK by leading the extension of a Series G funding round. So for a fact, now that they're in massive profits, they invested $750 million in NUBANK, and now this position is probably worth over $1 billion. Even though NUBANK does not allow trading in crypto yet, its investment unit, NuInvest, allows users to invest in crypto ETFs. And I suppose this investment is extremely surprising because in 2018, Berkshire Hathaway CEO Warren Buffett went on record and called Bitcoin rat poison squared. So in 2018, even in 2019, Warren Buffett, who is extremely intelligent in his investment choices and his vision, he said that Bitcoin is rat poison squared. He was against Bitcoin, he was against cryptocurrencies in general, and he really didn't see the value in it. And now what's most surprising is that his company is investing in a Brazilian company that allows users to invest in crypto ETFs, and this company might allow cryptocurrency trading in the future. So this switch we have seen before with the likes of the CEO of JP Morgan, who was against crypto but now is a very big proponent of cryptocurrencies. So this turn of events is a good sign for the crypto market in general. Warren Buffett's investments in a company that deals with crypto is a positive sign for the whole crypto market because it means that he believes that crypto is going to do well in the future. And if there's one person that I trust in this world that says that the market is going to move this way, or he says that he trusts a certain industry or a certain company in the industry, that would be Warren Buffett. I can count with my fingers the number of times that he was wrong, and I can count with my fingers the number of times that his investments went downhill or didn't bear fruit. So it's very interesting. So with Berkshire Hathaway acquiring shares in NUBANK, I think that this is only the start. I think that Berkshire Hathaway is going to start investing more and more into companies that are related in crypto. And NFTs and the Metaverse are the next big steps. So we have to keep an eye on where Berkshire Hathaway is going to put their money. Because I think in the future, being more and more digital, that's where their money is going to flow. The New York Stock Exchange files trademark application for its own NFT marketplace. So the NYSE has filed an application with the US Patent and Trademark Office to provide an online marketplace for various digital goods, including NFTs, cryptocurrencies, digital media, and artwork. In April 2021, the NYSE minted its first set of NFTs with homages to 6 hot tech stocks that debuted on the world's largest bourse, which is the NYSE, including Spotify, Roblox, and Coupang. At the time, the exchange said it wasn't selling the NFTs, only minting them just for commemorative purposes and to basically commemorate the listing of these big tech stocks on the NYSE. However, with this latest trademark filing, it's become clear that the New York Stock Exchange may have much more ambitious plans for the NFTs, which means that because they're filing a patent for an online marketplace for digital goods, the logical thought process would be that they want to mint NFTs and now they want to sell it as well, or allow the general public to trade in NFTs. And I think that that's what's going to happen in the near future. So why are fees on Ethereum dropping? The Ethereum fees have dropped significantly. Their gas fees have dropped significantly in the last few months. For example, a transaction swapping one asset to another would now pay $20.04 in a transaction fee, or as a gas fee. A similar transaction during March of last year cost a different user $125.18, which is over 6 times as much as today's transaction. And what happened here? The EIP 1159 was activated in early August in 2021, which is an update to the Ethereum network. So now every block now has a set base fee that must be paid in Ether in order to be included in the block. And to prevent volatility in the gas fee, they can only be adjusted by 12.5% up or down after each block, depending on whether the previous block was above or below the gas target set by the Ethereum core developers. And the base fee paid on every transaction is sent to a burn address, which is a mechanism that allows the native asset, which is Ether, to practically behave like a gas in a core. More importantly, the burn counteracts the inflation caused through block rewards and helps support the longevity of both the Ethereum network and the native asset. Because the base fee of every transaction is sent to a burn address, it helps support the decrease in the gas fees by sort of subsidizing it. And by reducing fee volatility, the network has shielded itself from transaction fees being sent through the roof in short period of time by NFT mints or token launches, which is true. We haven't seen big increases in Ethereum fees, even though we have massive projects or NFT projects in the works. However, the same is true in the reverse, and it may take weeks at a time for transaction fees to fall significantly longer periods of low activity. So this bears the fact that even though the markets were very depressed in the last 2 or 3 months, the Ethereum gas fees still remain extremely high, and this is due to this lag that we're talking about. Only now has the gas fees decreased because it takes weeks for transaction fees to fall after periods of low activity. Something interesting to note here is that falling transaction fees are great for user experience, of course, because we're paying less transaction costs. Who doesn't want that? But maybe a not so great signal for the network as a whole. Network activity will always be correlated to crypto asset prices, but an overly strong relation between the two could signal the majority of Ethereum applications are focused on asset speculation rather than on a real-world adoption through decentralized products like insurance, gaming, payments, and more. So if there's too much correlation within activity and price, this signifies a lot of speculation because it's easy for you to transact a lot, or if you sell a lot of Ethereum, the price goes down. If the general market buys a lot of Ethereum, the price goes up. And this is basically speculation. It doesn't mean there's no intrinsic value there. It just means that the price is moving up due to activity as opposed to real world applications of the Ether coin. So 18.36 million Ethereum addresses joined the network in 2021, which obviously have a balance of greater than 0, and this works out to a growth rate of 1.5 million new addresses per month. However, it's important to note that competition is becoming increasingly fierce. While overall numbers are up, there has been decrease in the proportion of active addresses on the network. Overall, active addresses were 1.05% of all addresses on January 1st, 2021, but have fallen to 0.86 as of February 15, 2022. And the number of whales holding more than 1,000 Ethereums has also been declining since 2021. Also, the average daily amount of transactions has stagnated at about 1.2 million since the middle of December, according to Ethereum statistics aggregator YCharts. And obviously this would happen because there have been a lot of congestion in the Ethereum network. The gas fees are ridiculously high. So of course, people are going to start looking at alternatives like Solana, and more recently, and being very fastly adopted now, Polygon. For example, following the tremendous spike in usage in last May, Matic, which is the coin for Polygon, has averaged more than double the daily transactions of Ethereum. So Ethereum has 1.2 million daily transactions. Polygon currently enjoys about 3 million daily transactions. And this is because their networks are almost never congested. the uptime is always 100% or nearly 100%, and the gas fees are minimal. I mean, you'll pay like $1 at max for a massive transaction. Despite this, Ethereum is still the leading smart contracts platform by total value locked in the ecosystem. On-chain statistics platform DeFi Llama indicates that Ethereum has 124 billion in total value locked, which vastly outstrips its almost 10 times as much as the second largest smart contract platform, which is Terra, with $15 billion. So Ethereum is still king, but if it's not careful, and if Ethereum 2.0 doesn't come very soon, it might be dethroned by the likes of Terra, by the likes of Polygon and Solana. JP Morgan becomes the first major bank in the metaverse. So they have taken a massive step into the metaverse, and they opened a virtual launch in the popular blockchain-based world Decentraland after it labeled the sector as a $1 trillion opportunity. Visitors to this launch, situated in a decentralized Metajuku Mall, are greeted by Roaming Tiger and a digital portrait of Jamie Dimon, the CEO of JP Morgan. They can get a presentation on the economics of cryptocurrencies if they go upstairs. So increasing mainstream adoption of the metaverse is also being driven by interests from massive brands, citing Adidas and Nike's move to create NFT-based products and shop fronts, as well as Samsung opening a metaverse store as enormous steps forward in adoption. And this isn't very surprising that big banks are starting to get in. If companies like Nike, Adidas, and Samsung are getting into the metaverse, it's the real deal. Soon we'll see Apple in the metaverse. We'll see other big brands or other big banks, such as Bank of America. We might see BlackRock. We might see oil companies, gas companies. We don't know. The metaverse is a hotbed of opportunities that is yet to be fully unlocked. So with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, please hit the subscribe button, share this video with everyone, and I'll see you tomorrow for the next one. Invest wisely and cheers.